In 2008, Warren Buffett challenged the hedge fund industry to beat the market for $1 million. And they were not able to do so. Why? Because the strategy of Warren Buffett, by just investing into the market, into the index, was superior. And in this video, I'm quickly going to explain to you in 5 minutes how to invest like Warren Buffett into the markets passively and with a very low starting amount. So the first step you want to do is get to know a little bit about what am I going to invest in. So this is Yahoo Finance. It's one of the most famous websites for news for following the financial markets. And as you can see up top, you have S&P 500, Dow Jones, and Nasdaq. Those are the three main focus points of starting with investing into the markets. So the S&P 500 it contains the 500 biggest companies in the US. The Dow Jones is the most famous index. It contains the biggest 30 companies, and the Nasdaq contains mostly tech companies. So the next question is, how can I invest separately in the index and follow that strategy by Warren Buffett? So I'm going to show you now the three ETFs um, that follow those indices. So the first one for the S&P 500 is SPY. And here you can see with the SPY that when we zoom out, we're going to take weekly candles. We see consistent gains over the past 15 years. This was the financial crisis. This was the COVID-19 crash. But overall, on average, the markets get around 7 to 8% yearly gains. So the first one is SPY. This is the S&P 500, now trading for around $411.42. So then DIA is the Dow Jones. Kind of the same graph. So this is for the 30 biggest companies. And then we got QQQ, the NASDAQ, around $321. So this is mainly tech-focused companies. Right up top, you're going to see them as well. This is the S&P 500, the NASDAQ, the Dow Jones. So I just showed you all their individual ETFs. Now, the big question, of course, is you saw the prices. It's around $300 to $400 per ETF. What if you would want to just buy or start investing for $100 a month? So if you want to start investing for $100 a month, you should search for a broker where you fractionally can buy those ETFs. For example, it could be Robinhood. I'm not sponsored by them, but they have, I believe, free trading costs, no trading costs, and you can fractionally purchase ETFs. So you can start investing for as little, as small as you want. If you think, you know what, I don't want to invest in the US markets, I want to invest internationally or in different sectors, you could type in MSCI here on TradingView and you could look for different markets, different ETFs. You got China, you got funds, you're going to see MSCI emerging, Brazil, China. You can look for many um, sectors or countries you want to invest in, and within those ETFs you're going to invest within those markets. However, do keep in mind that if you start to invest in a specific region, a specific country, or a specific sector, you are exposed to that country or that sector specific risk. So keep that in mind. But for diversification, it's perfect to also invest in different countries or regions. The best way is to buy monthly or quarterly, because that means that if we're going to just put this to monthly, you're going to buy at every single point in time. So when the market goes down, you buy. When the market goes up, you buy. So on average, within a market that on average is moving up, you are consistently accumulating by investing every month, but also because of the average market that is going up. This is not financial advice, keep that in mind. However, this is the way how Warren Buffett invests and how he has beaten all the hedge funds. And it's a great way to start investing as well, to start following the markets. So if you want to see any other trading strategies, please let me know in the comments. Also, don't forget to give a like and subscribe. And I hope to see you with the next video where we're going to discuss some more interesting trading strategies.